Mike Patton of Prosper Trading Academy joins me now. I call him Biotech Mike.
Thanks.
Good to have you here.
Thanks, Angie.
Because he trades biotechs almost exclusively, correct?
Yeah, almost exclusively, yes.
Right, so a company called Evolus caught your eye, and this company is trying to go up against Botox. This is exciting.
It is exciting. So yes, Evolus, basically they just got FDA approval for one of their products. Now, I can't pronounce the product's name, so I won't even try. But
the other Botox.
Yeah, well, let's call it the other Botox. So yeah, basically what it is a direct competitor to Botox. And it's actually 20 to 25% cheaper.
Wow.
Yeah. So basically Botox sold about $3.5 billion in product last year. So if they could just tap a little bit into that marketplace, it could be pretty nice.
This could be huge. So
yes.
The stock has already made this huge rocket ride of a move.
Yeah.
So what do you do as a trader here?
And this is the difficult part, you're right, because it's up about 13%. And at this point, you don't want to be too eager to get in because it still has to show it has legs afterwards. They have to sell products. So basically, what I would suggest is just to wait a bit, see if it can settle into a range. Right now it's trading around $20 to $21 a share. It was previously trading under $16 a share, so a pretty good move. But it could go higher because we still haven't seen the product come to market. And then once they're selling product, and they have sales, they could actually move the company's value up. So right now the company's value is about $450 million based on the market cap. But if it goes up, if they can produce billions of dollars in sales, then obviously the value would go up quite a bit.
Is this the riskiest time then to get in, do you think? Or one of the more riskier times?
It would have been much better if we were in last week, that's true, before this happened. But I would say it's risky to get in right after that happened, right after the news. Mm-hmm. I typically don't like to get into stocks right after FDA approval because once that happens, now you have to kind of let all the speculative froth bleed off. So if you're looking at it as a long-term investor, I would say you might want to try to take smaller positions over time to see if you can average a lower price, if possible. So I don't expect it to shoot to the moon because we still have to wait till they have sales. But once we see the sales figures, if they look really good, then I would expect the stock to move. So this one I would just say maybe take a little nibble at it, but wait until you see some real good momentum of sales, and that's when you want to start moving more into it. And stop loss will probably be around $15, I would say right
$15.
now. Yeah.
All right. So you have made some previous trades on our show, including TRVN. How's that holding up?
Okay, TRVN's doing very good. We had the initial momentum. It spiked pretty well. We took a partial profit on it. But the biggest thing with TRVN is that it is a long-term play because we're waiting to see if they can actually clear FDA approval. Now, we know they're working on the pathway that the FDA laid out for them. But we won't know for sure if they can pass that clearance until about the middle of this year. So there's a lot of time. But at the same time, that initial push when it became clear that they might be able to get over that hurdle was enough to move the stock up pretty sharply. So we were able to take advantage of that. And now we're just holding the rest of it and waiting to see what happens next.
All right. Thank you, Biotech Mike.
Thank you.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.